Next topic, political environment. Political environment with respect to business environment. So, political environment is a part of business environment. We have discussed that business environment can be classified into internal environment and external environment, and external environment can be further classified into micro environment and macro environment. So, we have discussed economic environment. In economic environment, we have discussed economic system and economic policies. Economic systems such as capitalist economy, socialist economy, and mixed economy. Economic policies such as monetary policy and fiscal policy. Let's start with another type of environment, which is political environment. So political environment consists of rules and regulations, various laws, acts, etc., or role of government in day-to-day business activities. The businessmen need to pay attention to political environment also to see how government action affects the business in day-to-day business activity. So what are the factors influencing political environment? So political stability, political relationship, for example, central government and state government relationship, ideology of ruling government, tariff rate, such as import restriction on quality and quantity of goods and services, corruption level, government intervention in the business, etc. Let's start with the role of government. Role of government as a regulator. Government intervenes indirectly, for example, by increasing import duty to control import, prohibitional role. It measures to control and cover risk of export and import of goods and services. Entrepreneurial role such as capital investment project, plant and machinery based by PSUs, public sector undertaking by central government or state government. And planning. Planning means deciding timing and usage of resources. Let's continue with branches of government. There are three major branches of government: legislative branch, executive branch, and judicial branch. Legislative branch involves those branch which makes the law making, policy making, and approval to budget in parliament. Executive branch, it administers and implements the law, and judicial branch, which interpret the law. Legislative branch involves legislators and member of houses of parliament. Executive branch, which includes the head of the state, for example, governor, and head of the government, such as prime minister, president, chief ministers, etc., and cabinet ministers. And judicial branch, which includes judges of various laws and courts, for example, magistrate court, high court, supreme court, etc. It is also responsible to settle disputes between business organization, employer-employee, and between two employees or between two companies. Our next topic is legal environment. It includes laws and acts passed by the government, rules and regulations, court judgment, administrative order related to business organization. It simplifies the legal aspect of business and provides smooth working of business organization. The businessman has to work according to these laws and knowledge is necessary. For example, advertisement of alcoholic product is prohibited. Statutory warning on cigarette packet, expiry date on packed product, etc. So, legal environment refers to the framework of laws, rules and regulations, and judicial system that governs the business operation. It ensures fair practices, protect rights, resolves disputes, and maintain order in business transactions. It includes labor law, taxation laws, environmental laws, and business regulations. So, what are the rules related to business? So, business and corporate laws, then employment related laws, competition law, health and safety related, and international treaties. And what about acts? So, Companies Act, Competition Act, then Factories Act, Industrial Disputes Act, Consumer Protection Act, then FEMA. FEMA 1999, Foreign Exchange Management Act, was passed in the year 1999. It applies in dealing with foreign exchange and securities transactions. The main objective is facilitating external trades and payment, promoting orderly development and maintenance of foreign exchange market in India. It also has indirect impact on export and import of currencies. FERA 1973 was replaced by FEMA 1999. Let's discuss what are the difference between both the acts. FERA 1973, it was complex and non-specific, and FEMA Act has 7 chapters and 49 sections with positive approach. Next, FERA was strict in nature and FEMA is liberal in nature. Next, there were no provision for penalty and it provides provision for violating laws and attracts penalties, and if not paid then imprisonment. Next, FERA deals with all the transactions related to foreign exchange and FEMA deals with only specific transactions. Now, FEMA prohibits dealing in transfer of foreign exchange and foreign exchange securities with any person other than authorized person. And what is the meaning of authorized person? So, as per section 2, the definition of person says that person includes, it means it is inclusive definition. Person includes individual, Hindu undivided family, companies, a firm, AOP, BOI, agency, and artificial judicial person. And it also includes any agencies or offices or branches owned and controlled by that specific person. Now let's discuss what are the transactions covered under FEMA. So all the transaction between residents and non-residents is covered under FEMA. So there can be two types of transactions: current account transaction and capital account transaction. So let's discuss capital account first. As per section 2 belongs to definition of all the keywords. So capital and account transactions are those transactions which alters any assets or liabilities, including contingent liability. Now, what is contingent liability? So we know meaning of assets, the property of the business. Liabilities, the amount which is payable. And what is contingent liability? Contingent liability is that type of liability which are payable or not, depends upon future uncertain event. So as we all know that there are three types of liabilities: fixed liability, current liability, and contingent liabilities. So fixed liabilities are payable for more than 1 year, long term in nature. Current liabilities are payable for short term, means within 1 year. And contingent liability, whether to pay or not, it depends upon future uncertain event. So any assets and liabilities or contingent liabilities outside India of a person resident in India. So, what is capital account transaction? Any assets and liabilities outside India of a person resident in India. Now we know the meaning of person, the definition we have already studied. Or assets and liabilities in India of a person resident outside India. So, what are the transactions covered under FEMA? Capital account transaction and current account transaction. As per section 2, capital account transaction is defined as transaction which alters any assets and liabilities, including contingent liability. It is specifically stated that contingent liability will be considered as one of the liability. So, contingent liability outside India, these assets and liabilities should be outside India of a person resident in India, or assets and liabilities is in India of a person resident outside India. And what is current account transactions? So it is inclusive definition. It states that transactions which are not capital account transaction are current account transactions. So simply it stated that any transaction other than capital account transactions are current transactions. As per FEMA, all the current account transactions are freely permitted. There are no rules and regulations except rule number 3, schedule 1. There is a list of prohibited items. There are 8 items which are prohibited. Rules 4, schedule 2, there are 10 items which requires government approval. And rule 5, schedule 3 states that there are 13 items which requires RBI approval. So rule 3, 4 and 5, schedule 1, 2, 3 respectively. Rule 3 states in which any business organizations are not allowed to transact. Rule 4 states that there are 10 items which requires government approval, and Rule 5 states that there are 13 items which requires RBI approval. So we have covered FEMA Act 1999. Let's discuss Consumer Protection Act 2019. Let's start with Consumer Protection Act 2019. The act was 1986 earlier. It was replaced in the year 2019 and now it is Consumer Protection Act 2019. The act covers consumer rights and redressal system. Consumer rights such as right to consumer education, right to consumer safety, right to seek redressal, right to information, right to be heard, and right to choose the product. And redressal system covers three levels of system, that is district level, district forum, state level, state commission, and national commission. Let's discuss everything in detail. Now, to know about what are the changes made in 2019, we need to understand what was the original act. So, first point is regulator. There were no specific regulator, whereas in the year 2019, as per Consumer Protection Act 2019, there is CCPA, Central Consumer Protection Authority, which act as a regulator. Precautionary jurisdiction. It means where the settlements are done. So if the claim amount is less than 20 lakh rupees, so district forum, 20 lakh up to 1 crore, state level, and more than 1 crore, national commission. The claims are settled at national commission. And now, if claims are up to 1 crore, then district forum, if more than 1 crore and less than 10 crore, then state level, and if claim amount is more than 10 crore, then national commission. So this limit has been extended. Next, terrestrial jurisdiction. It means where a consumer can file complaint. Earlier, where defendant resides or work for personal gain. Now, where complainant, the person who files complaint, is called as complainant, resides or work for personal gain. Compensation amount, there were no provisions. Earlier there was no provision related to compensation, and a person can approach to civil court but not to consumer court. Now there is a compensation for harm caused by product or services. It covers both product and services. Product means goods, tangible goods, and services which are intangible. Then e-commerce sector. There were no provision related to e-commerce. Now all the rules and regulations applicable to direct sales are now extended to e-commerce. Let's discuss two more points. Settlement. There were no provision for outside court settlement, and now court can refer settlement through mediation. Mediation means face-to-face settlement. And last point, appeal to settlement commission. Earlier, the complaint could be filed within 30 days, and now it has been extended to 45 days. So, complaint can be filed within 45 days from the date of harm. Let's discuss socio-cultural environment. It includes social values, belief, custom, tradition, education of society. What are the factors influencing socio-cultural environment? So, first point is nature and size of population. Population growth rate, age and sex composition, family size and family structure, then level of income and standard of living, then level of education, literacy rate, illiteracy rate, etc., and consumer taste and preferences. All these are the factors that influences socio-cultural environment. Let's discuss corporate social responsibility. There are many questions are many of times the questions has been asked from this topic. Corporate social responsibility. Corporate social responsibility. So the business operates in a society. They get customers, suppliers, raw material from society. So it is a responsibility of a business to contribute for the betterment of society. The government has also introduced CSR rules in the year 2014 for the well-being of society. It works under Ministry of Corporate Affairs. Remember this thing. There are many of times questions has been asked from CSR topic. So remember CSR covers under Ministry of Corporate Affairs. Now let's discuss about some provisions of Companies Act. Section 135 of Companies Act 2013. Under Schedule 7, there are some rules related to CSR. First point, it is mandatory for all the companies whose net profit exceeds 5 crore rupees or net worth exceeds 500 crore rupees or turnover means net sales exceeds 1000 crore rupees will be liable for CSR. So any companies, whether it be an Indian company or foreign company, the branch is in India, then it will be liable as per section 135 of the Companies Act. If the net profit exceeds 5 crore rupees or net worth exceeds 500 crore rupees or turnover exceeds 1000 crore rupees. Turnover means net sales. Net sales means cash sales plus credit sales minus sales discount minus sales return. Whatever balance is available will be net sales, or we can call it as turnover if turnover exceeds 1000 crore. So any company which fulfills any one of the above provisions will be liable for CSR. And if Act once applicable, it is always applicable. It means even if net profit, net worth or turnover falls below the limit in next financial year, then also it will be applicable for lifetime. It is applicable to all the Indian companies and foreign companies whose subsidiary companies or holding companies is in India, or even office is in India or branch is in India, then also it will be applicable. Now, CSR committee includes three or more board of directors. At least one director should be independent director. So, CSR committee includes three or more directors, and at least one director should be independent director. Then, proportion contribution to CSR. At least 2% of average net profit of preceding three previous financial year. India is the first country to incorporate law under CSR. And what are the penalties? In case if company has not spent in CSR or non-disclosure or in case of absence of detail, all the directors will be penalized for minimum 50,000 up to 25 lakh rupees per directors or imprisonment up to 3 years. Those directors who are in charge will be penalized for minimum 50,000 rupees up to 25 lakh rupees or imprisonment of 3 years. So till now we have covered concept and element of business environment, economic system such as capitalist economy, socialist economy and mixed economy. Then economic policies, monetary policy and fiscal policy. Then we have discussed political environment, role of government in business, legal environment, and we have focused specifically on Consumer Protection Act, Foreign Exchange Management Act, then socio-cultural factors and influence on business. Then our last topic was corporate social responsibilities. Let's discuss some MCQs with respect to this topic. Which policy helps in modifying investment structure of an economy? Monetary policy, fiscal policy, budget, or foreign trade policy? Correct answer is fiscal policy. We have discussed that GDP includes consumption plus investment plus government spending plus net export. And net export means export minus import. So this investment structure covers under fiscal policy. Which of the following is not a component of monetary policy? Activities of open market, cash reserve ratio, legal liquidity ratio, or deficit financing? Correct answer is D, because all these are the component of monetary policy, either by direct measure or by indirect measure. But deficit financing covers under fiscal policy. Next, a stable and dynamic political environment is indispensable for business growth, enhancing the export, increasing participation, both A and B. Correct answer is both A and B. A stable and dynamic political environment is indispensable for business growth and enhancing the export. Which of the following is not an element of social environment? Tendency of population, individual needs, cultural elements, or policies of competition? So correct answer is D. Policies for competition covers under legal environment. All the other covers under social environment. Tax tax policy comes under which element of business environment? Legal environment. Tax laws and rules and regulation related to tax covers under legal environment. Tax jurisdiction is an example of which environment? Again, correct answer is legal environment. Which of the following statement is true? Economic system affects economic environment of business. Correct. It is possible to control business environment. Whether it is true or not. Both the statements A and B are true or none of the above. So correct answer is A. Only A statement is true because business environment consists of economic environment and economic environment consists of economic system and economic policies. So economic system affects economic environment of business is correct statement, and it is possible to control business environment. So as we know that business environment can be classified into two categories: internal environment and external environment. The internal environmental factors are controllable, but external environmental factors are beyond the control of business, which is further classified into microenvironment and macroenvironment. A part of business environment is controllable, but external environment are not controllable. Then the redressal system of consumer consists of National Consumer Forum, District Consumer Forum, both A and B or none of the above. Correct answer is both A and B. The redressal forum of consumer consists of District Forum, State Commission, and National Commission. So it is a three-tier forum, three-tier dispute settlement mechanism. Which of the following is not an way to implement CSR by organization? Environmental sustainability, energy conservation, community involvement, or ethical marketing process? Correct answer is ethical marketing process. All these three covers under CSR. All three are a part of CSR. But ethical marketing process, it is covered under advertisement and marketing. Next, when was FEMA came into existence? It is 1st June 2000. The act was passed in the year 1999 and it came into existence from 1st June 2000. Correct answer is A. FEMA is implemented for to facilitate external trade and payment, to emphasize on transparency, both A and B, or none of the above. Correct answer is both A and B.